Taking a look at Microsoft, the tech giant announcing plans to lay off about 10,000 workers. Shares, though, still under pressure this afternoon. The final hour trading off just over 1%. We want to bring in Dan Ives, Wedbush Managing Director, Senior Equity Analyst. Dan, it's great to see you here. So taking a look at the market's reaction, doesn't look like the street is as excited as maybe we were anticipating it to be following these large layoffs. What did you make of the news?
Look, I think it was a rip the Band-Aid off moment for Nadella and Microsoft. And we're seeing it across tech. These companies were spending like 1980s rock stars at a pace that was unsustainable. You're starting to see demand soft. And I view it as a proactive, smart move that we're going to see across tech. So ultimately, I think as we go into earnings, this is going to be a positive that really preserves margins.
How does it change your view, if at all, Dan, of the stock? And do you think there are more layoffs to come from Nadella?
Yeah, there could be some more layoffs, but really they're going to double down on cloud. They're going to be aggressive on innovation. We've seen with, in terms of open AI and some other technology partnerships. And this is a company that's going to be in the left lane. They're not going to be in the right lane going 45 miles an hour. Nadella is going to be aggressive and spend, and I think higher in areas where strategically that's where Microsoft's going to be, for the coming years. But non-strategic, that's where they're cut costs. And I think it's a smart poker move for Nadella to do this sooner rather than later.
Dan, what does that normalized growth look like? Because Nadella said that he expects, quote, some amount of normalization in demand following that massive surge that we got during the pandemic. So as we look out to the rest of 2023 into 2024, 2025, what do those growth numbers more realistically look like?
I mean, when you take a step back from Microsoft, we're still less than 50% penetrated on the cloud. So I think we're just starting to go into, I'll say, fourth, fifth inning of cloud. I mean, this could be overall from Azure growth, 30%, call it line in the sand. I think bears would say that it's going to be low to mid 20s. And I think that's really the sort of setup going into earnings. And then you take this in a 2.5%, 3% IT spending environment. Still significant growth that you're going to see from Microsoft, from Jazzy and AWS, from GCP and others. And I think that's what's important here is that cloud is going to be a pillar of strength despite the dark economic storm that we're seeing.
Dan, I'm an admitted ChatGPT fanboy. How significant is that in terms of the investor story? Does it play into the cloud?
Oh, yeah. I think right now, Microsoft's the best AI play out there. I mean, even when you look at some of their strategy from Git to you look at ChatGPT, I think that is just a massively smart investment here because Microsoft, they're looking at this as what they could really put around their Redmond ecosystem, from Azure, from Office 365 to the consumer point. That's why the strong are going to get stronger during this downturn. And Microsoft learned mid-90s Gates during the antitrust battles basically stopped investing in terms of social, mobile, and others. Nadella is not going to make the same mistake, which is why I view Microsoft as a winner here, despite many yelling fire in a crowded theater.
Dan, what about M&A? We have to talk about the deal to buy Activision. We know FTC trying to block that deal. Are you still confident that that deal does get through?
Yeah, I mean, that's obviously Game of Thrones battle versus FTC, but I believe Microsoft does ultimately become victorious there in terms of, that's why they're not, sort of backing down in terms of going after Activision. That's a key asset. And I believe that there's going to be more M&A from Microsoft and from others in big tech. And this is something that everyone in big tech's watching because, Microsoft wins this deal. I think that really starts to, open the spigot in terms of potential M&A across tech.
Meanwhile, the next 2 quarters, how do you characterize the road ahead for big tech?
Look, I think most investors from a whisper expectation, they're expecting 8 to 10% cuts relative to guidance. So I think whisper numbers are already there in terms of, what's going to happen with guidance where you'll have a pretty significant slowdown that you'll factor in. But I think Street's looking past. They're looking past the next quarter or two. What does second half look like? What does 2024 look like? And that's why I think investors have learned from 2002, from 2009. I think today, despite obviously all the negative headlines, this really is going to create what's the next growth cycle. But I believe cloud, cybersecurity, and some of the big tech holds up better than expected. We believe tech stocks are up 20% this year. And I think FANG and big cap tech could be up more than that.
More than 20%. All right, we will see what the next 11 and a half months hold. Dan Ives of Wedbush, thanks so much.
Thank you.